Welcome to My Insurance Matters, a 5-minute weekly broadcast designed to help individuals and businesses address risk and manage their insurance cost and coverage. My name is John Shega, and I am your host and the owner of Aspire Insurance Agency. This week we're going to discuss a rather contentious issue in insurance, but one that certainly may have an impact on your insurance premiums. The issue is credit scoring, and to help us sort out the details, I am pleased to welcome Tim Zemanovic, President of Citywide Mortgage. Before we begin, listeners can contact us with any insurance-related questions by simply going to www.myinsurancematters.biz. We'll be more than happy to try to help. Welcome to My Insurance Matters, Tim.
It's my pleasure, John.
Tim, there have been a lot of discussions lately about home loans, consumer debt, and the financial health of both businesses and individuals. Can you explain what credit scoring is?
Certainly. Very briefly, credit scoring is a method to gauge the financial health of a company or individual. People or firms lending money or offering products want to be able to judge the amount of risk involved and ensure recovery of the loan or product. Companies often provide better terms of those accounts, or individuals believed to have less risk.
In insurance, companies routinely use credit scoring to gauge if a client can afford to operate in a safe manner and pay their premiums. Many have tried to make the correlation that the higher the credit score, the less apt the policyholder is to sustain a loss.
Do you agree with this assessment by the insurance companies, John?
Well, Tim, the only thing I'm convinced of is that many insurance companies offer different terms based on good credit scores. One way for consumers to pay less for their insurance is to manage their credit score.
We see that on the mortgage side as well.
So what are the ranges, Tim?
John, credit scores range from 350 to 850. The higher the credit score in this range, the better result. In very general terms, a minimum score of 620 is desirable. The average score for a Minnesota consumer is about 704, and very few people have scores greater than 800.
So what factors go into developing a credit score?
There are 5 major factors ranked by the percentage of impact on the final score, and they include your payment history, your outstanding credit balances, your credit history, the type of credit you use, and the inquiries on your report. Of the 5, the first 2, payment history and credit balances, carry the most weight.
So I'm assuming payment history simply means paying your bills on time.
That's correct.
And what about the other, outstanding credit balances? Can you offer some insight on that one?
Sure, John. It's the ratio between the outstanding balance on the account and the available credit limit. That is, if you have an available limit of $10,000 and you spend $5,000 of it, you're at 50% of your limit. A 50% balance will not help your credit score. People who don't use more than 30% of the available limit generally have higher credit scores.
So as an example, if my credit limit with Visa is $10,000, you're suggesting I try not to charge more than $3,300 a month.
That's correct, John. It's very simple. Again, it's just a rule of thumb, but I thought your listeners might like to know this.
Yeah, it's very interesting. I had no idea. Since credit scoring is so important, let's talk a bit about how a person can learn more about their score and more about credit scoring. First, let's hear a word from our sponsor.
Let the Smile Center put a smile on your face. Smile Center.
Have you tried the Smile Center yet? Founded in 1990 by Dr. Ed Silker, this growing dental facility is designed to meet your individual needs and schedule. This flexibility includes evening and weekend hours and an in-house denture laboratory. Give them a call today.
Smile Center.
Welcome back to My Insurance Matters. My name is John Shega, and our guest today is Tim Zemanovic, President of Citywide Mortgage. We're talking about credit scoring and its potential impact on your insurance premium. Tim, how can people obtain more information about credit scoring or their credit score?
John, for free, your listeners can request one credit report annually from all 3 credit reporting companies. Just visit www.annualcreditreport.com. Again, that's www.annualcreditreport.com. Or you may also contact your local mortgage broker or banker for assistance.
Tim, credit scoring may raise many questions for many of our listeners. Is anyone regulating this activity?
Yes, the Federal Trade Commission provides oversight in this area. Their website is www.ftc.gov.
Well, Tim, I see we're just about out of time. On behalf of Steve, our piano player, and Tim Zemanovic from Citywide Mortgage, this is John Shega wishing everyone a safe and healthy week.